All right, Nvidia's earnings are out, and I've spent a few hours digesting these results, and boy, are they incredible. Now, I'm going to have several videos coming out in the next few days analyzing Nvidia's results. This will be the first of those, and this will be where I update my buy recommendation for Nvidia stock. You probably already know, coming into the quarter, I had Nvidia stock rated as one of my top stocks to buy in 2024. Now, I already mentioned the quarterly earnings results were exceptional, but the stock price is also up. So is it now time to take profits in Nvidia stock? I'll answer that question. Let's start with looking at the company's numbers, revenue, profit, and cash flow. And then we'll look at the valuation, and then I'll update the recommendation on Nvidia stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So top line revenue came in better than expected. Nvidia delivered $26 billion in revenue in its first quarter of fiscal year 2025. That was up by a whopping 262% year over year. Man, phenomenal growth, and better than what management told us to expect. Remember, just a few months ago, Nvidia management told us, investors, that they were going to deliver $24 billion in revenue for this next quarter. They actually delivered $26 billion in revenue. So $2 billion better than they told us. To make matters even more impressive, they told us that their gross profit margin would be 76.3% when they reported these next quarterly results. They actually delivered 78.4% gross profit margins. So better sales and better profit margins on those sales. 1-2 punch for Nvidia. You can understand why the stock price is up following these results. Many times companies deliver some better than expected revenue numbers for the quarter, but that comes at the expense of margins. Sometimes they see an opportunity to lower their prices to boost sales, and they take advantage of that opportunity. Nvidia demand is so strong for its products that they're selling them at premium top-level prices. They've got demand that exceeds supply, so they're able to generate close to 80% gross profit margins on their products and services. Excellent profitability here. Operating income jumped to $16.9 billion, up from $2.1 billion in the same quarter the prior year, a 690% year-over-year increase. Now, I'll take a moment to say that Nvidia's profit and revenue are not going to grow at these levels forever. They're probably not going to grow at these levels for longer than another 4 quarters maybe. That's when they're going to start comparing against the quarters last year when they felt this initial jump in revenue on the back of rising effectiveness of artificial intelligence. What's more, competition is starting to jump in. You're starting to see AMD ramp up supply of its GPU. Intel is working on a GPU. You've got these large cloud providers all coming out with their own chips to try and take slivers of the market. And that'll slow down some of the growth for Nvidia, even though they're not up here with Nvidia in terms of the quality of their product. But as you'll see Nvidia succeed, you'll notice competitors jump into the market, spend billions of dollars on research and development, because these are excellent results here. And when you deliver revenue that's growing by 260% at gross profit margins near 80%, it's inevitable that competitors will jump in. This industry is too attractive. These profits are too attractive for competitors not to make an attempt or not to make a greater attempt at taking some pieces of this market. So take these results, enjoy them, but don't expect them to continue for the very long term. But that's okay. Investors in Nvidia stock don't need these level numbers to deliver solid return on investment from their purchases of Nvidia stock. Now, data center segment revenue is the primary growth driver for Nvidia, increasing 427% to 22.5 billion. This is now the vast majority of the business revenue. 22.5 billion out of the total 26 billion in revenue came from its data center segment. This is where AI-driven demand is coming from. This is where the company's business relies on. This is the majority of the valuation. Now, maybe, 5 years later, the automotive segment or maybe the professional visualization segment, maybe other segments will grow to rival that of the data center. For now, the data center is the name of the game here. Going more deeply into revenue, NVIDIA is saying that these increases reflect higher shipments of the NVIDIA Hopper GPU computing platform, which are used for training and inferencing large language models, recommendation engines, and generative AI applications. Large cloud providers continue to drive strong growth as they deploy and ramp NVIDIA AI infrastructure at scale, and they represent mid 40% of their data center revenue. These large cloud providers are companies like Amazon with their AWS, Alphabet with their Google Cloud system, Microsoft with Azure, and these are the segments that are employing NVIDIA's chips to develop their artificial intelligence capabilities. And what we heard from all of those large cloud providers is that they're increasing their spending on GPUs and their AI infrastructure by the billions of dollars. We could even throw Meta Platforms in there, which was also a large investor in NVIDIA's GPUs. They've all told investors that they're going to increase their spending by the billions of dollars, and that this year and next year they're going to increase from whatever they spent this year. So not only are they going to spend an extra few billion this year, but next year they're going to spend an even increasing amount from these providers of AI GPUs, NVIDIA being the primary provider of those GPUs. Area I'm watching, kind of like an undercover growth segment, growth driver for NVIDIA, is self-driving platforms and NVIDIA's participation in that industry. Tesla and many other EV companies are working to, and the car companies overall are working to expand their capabilities in self-driving. And this might be the area, the next growth driver for NVIDIA when the AI wave kind of levels out, which is not going to be this year. The AI wave is surging this year. It'll probably be surging again next year. But maybe 3 years from now, 4 years from now, self-driving platforms will jump to take the lead as the next catalyst, as the next growth driver for NVIDIA. NVIDIA has already demonstrated that its GPUs are the best in class for gaming, right? We saw that several years ago, 5, 6, 7 years ago. They were the best in class for gaming. And then we saw NVIDIA's GPUs were the best in class for mining cryptocurrencies, right? We saw that, I want to say 4 years ago, maybe. And then now in the last year and a half or 2 years, we saw NVIDIA's GPUs were the best in class for developing large language models and AI capabilities. I think we'll see the similar trend for AI and self-driving platforms, and NVIDIA being the best in class provider for the computing necessities for developing self-driving platforms. And that could be the next big wave, the big catalyst for NVIDIA 3, 4, maybe 5 years from now. Cash flow from operations jumped to 15.3 billion, up from 2.9 billion a year ago and 11.5 billion a quarter ago. And of course, you've probably already read the headlines that NVIDIA announced a stock split, 10-for-1 forward stock split issued on their common stock. And they say they did this to make their ownership more accessible to employees and investors. I just wanted to briefly touch on that in this video. I'll have another video out specifically talking about NVIDIA, the stock split, and what that could mean for NVIDIA stock investors. So stay tuned for that coming soon. Looking ahead, NVIDIA forecasting revenue of 28 billion in the next quarter, with gross profit margins coming in at 74.8%. And given how they've beat expectations for several consecutive quarters now, and given the forecast we've seen from the large cloud providers suggesting how many more billions they're going to be investing in AI, I wouldn't be surprised if, again, Nvidia beats these expectations in the next quarter. But even if they don't, this would represent significant year-over-year growth in and of itself. So, unsurprisingly, you can see the after-market hours activity for Nvidia stock, the stock jumping from around $930 per share all the way up to $1,020 per share before giving up some of those gains, and it's now trading at over $1,000 per share following these earnings results. Still, if you look at the forward price to earnings ratio, Nvidia stock is trading at a forward PE of 29.54, which is still relatively cheap given its excellent competitive dynamics going forward. So to update my recommendation of Nvidia stock, you can see it's one of my top 10 growth stocks to buy and top 25 stocks to buy for 2024. I'm updating that recommendation here on May 22nd, suggesting I still think the stock is a top 10 growth stock and a top 25 stock to buy, still, even after this much growth in the stock price in 2024. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.